Greetings and thank you for joining us at FutureMoneyTrends.com. I have what is probably a perfectly timed interview for everybody today. We are in the birth of the new gold bull market, and right now we are finally seeing what is essentially the first meaningful correction, the first real dip, a chance to buy on the dip. And with us today is probably the guy who's paid off more mortgages, funded more college educations, and created more millionaires than anybody I know. Our guest today is Keith Neumeyer. He's the CEO and founder of First Majestic Silver. He's the chairman and founder of First Mining Finance. Now, this is the top guy in the resource sector, everybody. He also was the founder in the 90s of First Quantum Minerals. It's a $1 billion copper producer. First Majestic Silver, it's another $1 billion giant, a primary silver producer, and in all honesty, probably the most popular silver stock for insiders and institutional investors. You know, Keith launched First Mining Finance last April in 2015. We had the intent on targeting distressed sellers in the bear market and build up this gold mineral bank. And he has really shocked everybody. Today, just over a year, the company will soon have 15 million ounces of gold resources. And the investors in this company have seen their share price double in just the past month and a half. And whenever I speak to guys like Rick Rule or Eric Sprott or any of the legends in this business, they all tell me Keith is the one good guy. He's one of the few that you want to attach your money to in this very volatile sector. So here we are at just the start of a gold bull market, a silver bull market. The shares are up dramatically, but we are finally seeing that pullback. So if you felt like you didn't get a chance to get enough exposure into this sector, well, here's your chance, and here's the guy. Keith, thank you so much for joining us today.
Well, thanks, Daniel, for your time today, and also thank you very much for all the compliments you just threw my way.
Well, hey, I got to tell you, Keith, I did a conference with Miles Franklin and Andy Hoffman about 3 or 4 days ago, and I was blown away. I had just person after person after person come up to me, including Andy Scheckman, the owner of Miles Franklin, people who had invested in your companies and, you know, just very, very happy with the results. Not only the share price going up, which of course is very important to people, but the focus and the drive that you and your management team have done to focus on building these companies. So many companies, you know, they have silver in the name or gold in the name, and not much happens, but my goodness, I mean, First Majestic Silver has 4,000 employees, primary silver producer, and of course, First Mining, it's just the beginning. So, hey, we all appreciate people like you in the industry. I wish there were a lot more guys like you.
Just, you know, on that topic, Daniel, I think one thing that does differentiate me, you know, from many of the other, you know, people that are running companies that are publicly traded, you know, is that I align myself with the investor, and you know, my share position at First Majestic has never gone backwards in 1 year. I put the company together, and it's now, you know, shockingly in its 14th year, and we're the second largest silver producer in Mexico, and my shareholdings has gone up each and every year for the last 14 years, and you know, same with First Mining Finance. You know, since it went public in April of 2015, you know, my share position's gone up substantially since we went public.
Yeah, I know, it's incredible. I've seen on the public filings, I mean, literally millions of shares. Keith, how has the first few months of this new bull market compared to previous ones? You've been in many of these cycles. For many investors today, they're buying because they're concerned about inflation or the Fed, or they're just looking at an obvious cyclical low for the sector. So coming out of this bear market, this horrendous bear market, how has the first few months been? And by the way, I shouldn't put words into your mouth. Do you also agree with my statement that we are at the start of a bull market?
Well, when I put First Mining together, you know, it actually took me almost 2 years to get it public. I was hoping to get it public at the end of 2014, but it was just so difficult to raise money at that time, and it was even challenging for myself. And then we finally brought it public in April of 2015. And you know, the whole purpose of going public with that company was to take advantage of the low valuations that were in the sector, because I felt that the bottom was close to be in if it wasn't in already. And you know, and these bottoms, you know, bottoms are not V bottoms. Bottoms are generally a process that, that takes, multiple quarters and sometimes multiple years. And in the case of, this bear market in the resource sector, silver hit a top of $50 in April of 2011, and it hit a bottom basically in December of 2015. So that's quite a long bear market, and I didn't know when the bottom was exactly going to be into the date, but I knew that we're at least towards the end of the bottoming process, and it was time to put together a new company. In the case of First Quantum Minerals, when I put that company together, we were in a very bad bear market in the mid-90s, and when I put First Majestic together in the early 2000s, again, we're in a very bad bear market. And what I've at least proven, if anything in my career, that I'm a very good buyer of assets, and I know when to buy. And in the case of First Mining Finance, we bought 8 companies in the last 13 months since we've been public, which is definitely a high in my personal career. I've never bought 8 companies in 13 months before, but it was those valuations that allowed us to do that, and it was my conviction that the bottom was in fact in or close to being in. And now this move that we've seen over the last couple of months, to me, has proven that the bottom is in and the new bull market has begun for sure.
When you look at the correction we're having now, and it's funny, you actually literally, I want to say it was a week ago, maybe 2 weeks ago at the most, you told me, you're like, Dan, a correction is coming, and it's going to be good. It's going to be needed. It's going to be healthy, but up to a 20-25% correction could happen. It needs to happen. And we're now obviously we're seeing it's still a small correction. I mean, when you consider we're probably only, 45 days max from where gold and silver was, just in late March or even early April. So it's not a severe correction, but it is probably the first meaningful correction, I would say. What should investors expect in, a lot of people investing, this is their first go round, or they've seen these tremendous gains for the past 6, 7, 8 months. And of course, this is the first time they're seeing some of their portfolios go down for a few days in a row.
Well, you see, you say gains in the last 6 months or so. These gains have only really started in February. We had a very weak November, December, and then January came along, and it was like the mining sector was down 20% in a matter of 2 weeks in January. And I remember First Majestic, was hitting ridiculous lows, and it was almost like this. It was this last capitulation, selling move that took place at the beginning of the year, and then all of a sudden, there was no sellers left. Gold started to, get a bit of a bid, and due to all the talk about negative interest rates, and some very influential or large, well-known players started to come into the sector, and the press started, covering some of these investors, coming into gold, and GLD holdings, bottomed and started to increase again. So there was a lot of things that suggested that the sector had bottomed, and all of a sudden there was this huge rush of money. It was like there was all this money just sitting on the sidelines waiting for a reason to buy gold and buy mining stocks, and it just all happened. And we have a situation where we have stocks up 200-300%, and it was like one would go, another one would go, another one would go, another one would go, and I've never seen such a broad-based move in such a short period of time. And, it was pretty dramatic. And, I travel all the time, as you know, and I'm hearing from a lot of big money, a lot of big institutions, that they completely missed this move, and they didn't participate in this at all. Some, of course, did, and so on and so forth. But I'm talking about the broad-based, generalists who've been, kicking tires, and then they've just been nervous about coming into the sector and have missed this move. And this correction, I think, is well welcomed, by many of these big investors, because I think this is their opportunity to start coming into this market, in advance of the next big move. And this is very typical, of a correction. And I did say to you a couple of weeks ago that I was expecting a correction because, May, June is typically the weakest period for the mining stocks. And you could go on my Twitter account, and there's an interesting 30-year chart on silver, and it shows that June is generally the bottom over the last 30 years. Well, June is the bottom. for silver on average for the last 30 years. And I've been waiting for this correction, and the market peaked on May 18th, just last week. And it lasted, this run lasted probably a month longer than I expected it was going to. And we've now seen about a 10% correction, and I wouldn't be at all surprised to see, another 10% correction. But, this is really the time that, investors really have to start looking at the good names. And if you've missed this move or you've taken profits and you're out of this market, this is the time that you got to be looking at the good names and start accumulating positions again.
Keith, I love giving my subscribers kind of a behind-the-scenes look at information that's not out there, but of course it's not, against the regulators to share the information. But for example, like the Future Money Trends website, this time last year had 38,000 people visited in a month. The depth of the bear market. Over the last 30 days, we've had 125,000 people. Clearly, the sentiment and the mood has changed. And I wanted to get your insider's perspective on, here First Mining Finance has went from 0 to 15 million ounces of gold, acquired 8 companies. Now, you did that in the bear market. How have things changed since February when negotiating with other companies, or how has it changed when looking at possible acquisitions for just projects? What has it changed on the level of First Mining Finance being able to do what it had set out to do?
Well, most of the companies that we bought, are companies that wanted to join our group. We're a proven management team, where we've got skills in raising capital, we've got skills in building assets and monetizing assets, and I think my track record speaks for itself. So the companies that we've merged with are really partners, and they they've become our partners for the purpose of building a bigger entity, building a bigger company, and advancing these assets and making money for themselves, obviously, but also for the collective shareholders. And it's worked really well. But there are companies out there that are entrenched and just simply don't want to do deals for their own selfish reasons. But and also some of these companies that we have on our list that are potential targets have gone up as well over the last month or so. So we're not going to get crazy. We're up to 15 million ounces now. I'm pretty happy with where we are. I think that we really have to focus inwards and really start to tell our story a little bit more. We've grown so quickly, and I don't think people really understand what we've actually achieved as a company. We currently have probably the biggest asset base of gold development projects in the world. We almost own Ontario now. I think there's only a couple, the gold development projects left in the entire province of Ontario. So, we're going to rejig our website. We're going to put out a whole bunch of new reports on our different assets. We're going to do some work, to tidy them up and make them look a little bit better. We're going to really try to get the market to understand what we've accomplished. And I think, over the next, 6 to 12 months, I think you'll see that the story is going to evolve, very nicely. Whether we make another acquisition, well, that time will tell. I'm very sensitive to the price, what we pay for assets. I don't want to overpay, and I know that by paying too much, you can destroy your company. So I'm very good at buying assets, and I'm very patient at buying assets. And if we don't buy any more, then then maybe that's fine. But I've always got my eyes open, and we will continue to look around.
Keith, what pushes gold and silver, and specifically the mining shares, I guess, higher? Is it the Fed, the macro news, or is it just come down to cyclicality? Because I would have suspected and thought that QE and all the things that happened over the past 4 or 5 years during the bear market would have driven gold to $3,000 an ounce, and here we are. And it's, again, it's so funny how things work with the markets. Everybody was dreading interest rate increases as if it was going to be the death of gold and gold was going to go to 700. We get the first rate hike, and essentially it marked the damn bottom here. And, all we've seen is higher highs and 52-week highs since the Fed raised rates. So, I mean, is it news related, or is that just kind of the part of the sideshow? Is it really just it comes down to a cycle?
Well, the market is, of course, it's cyclical, but markets are are completely run by sentiment, in my view. Apple, for example, was, the headline was the first $1 trillion company. Well, I never got there, obviously, but that was the talk. And all of a sudden, you see the central banks. I remember seeing a report out of the Bank of Switzerland and saw what their shareholdings was, of different equities around the world, and their largest holding was Apple. This is the government of Switzerland. There's their largest share position being Apple. Which is just crazy. So there was a hate on the mining sector for whatever reason. It had a 10-year bull run. It went all the way from. I remember seeing the bottom in gold in 2002, and that's when I put together first Majestic Silver. And we had a 10-year run to 2011, 2012, and then the market topped out, and that was kind of the end of it. And then everyone, some people got caught owning stocks, and then all this deflationary talk around the world, China slowing down, and the grand bull market in metals just crashed to an end, and no one wanted to own it. And it got so bad that not only did people not want to own it, they actually hated it. And they said it'll never recover. And they forgot that, actually the mining sector is quite cyclical. And, it wasn't a long one. It was 5 years. It's one of the longest bear markets I've seen. But still, it did come to an end. And then all this, rush of money, came into it. But, I don't think it's supply-demand fundamentals that are. You can't tell me for a second that when silver was trading at $50 in April 2011, that the demand for silver was less or greater than it is today. Actually, silver demand at current levels at $16, $17 is greater today than it was when silver was at $50. So, if the price was impacted by supply-demand fundamentals, silver would be trading at much, much higher prices today.
Speaking of silver, on a recent SGTreport.com interview, you talked about $100 per ounce silver. And that's fascinating. I mean, you are a primary silver CEO. And so when it comes to the physical price of silver being over $100, do you foresee this being a march forward where it's a 4 or 5 year bull market, or $100 silver? Will it be a result of possible manipulation, basically the cartel breaking, and then a rapid shock higher?
Well, I'm a big bull on gold. I think that we're going to see a major reset in the world. I think that it's coming to maybe not mainstream thinking, but definitely I think in some of the upper circles, I think it's pretty well understood that the debt in the world is never going to be paid off, and we have to have some kind of major reset that is likely going to include gold, and the Americans have the largest hoard of gold, and for them to pay off their debts, they're going to need probably north of $10,000 gold, which I think will happen, but. I've been quoted many times, saying I expect to see triple-digit silver, and that's assuming gold doesn't move. If gold goes to 10,000, then silver will be some ridiculous number, but could even be $1,000 silver. I don't know. It sounds stupid. I know to even say numbers like that, but you look at what we're mining today, and then this is what I don't really get, and then this goes to the pure rarity of the metal, and I look at silver as a strategic metal, not a precious metal, because it is so required by the human race for everything we do on a daily basis, and people don't really understand that. And nothing of yours would work. Your automobile, your house, your computers, your cell phone, like everything requires silver. And we're mining right now, for every 1 ounce of gold, we're mining only 9 ounces of silver. So, that would suggest that we should be trading at 9 to 1, which would put, at $1,200 gold, what's that? It's $130 or $140 silver or something crazy. But, really, that's, if you just look at what we're mining today, that's where silver should be trading. And then, we're trading at 73 or 75 to 1. And I just don't think that ratio can last. And, I'm an advocate saying it won't. And we got approached by an electronics manufacturing company that manufactures cell phones and computers just about, 4 weeks ago now. There was 3 of them in the meeting, and they want to bid on our silver, and it's the first time in the 14 years of running First Majestic that we've ever been contacted by an electronics manufacturing firm, and to me that tells me that there's something changing in the market.
That is very interesting. Now, with the physical supply being tight, I know the mine supply is 9-1, but I've read many reports that silver is actually above ground available supply is less than gold. And the gold supply might be 5 times as large as the silver supply, or 2 or 3 times the size, depending on what report you read. But just a quick question out of curiosity. You're a mining guy, a gold and silver guy, and palladium used to be worth more per ounce than platinum. Do you ever see a scenario where silver is worth more than gold, or closer to parity with gold?
Well, it's I'd love to see it, but Ted Butler, says that he's expecting 1-to-1 gold silver, and I've never quite gone that far. With any bullish comments that I've made, I look at the ratio, and that's kind of my basis or my thesis for where the metal should be trading. Now, it could overshoot, of course, and just because we're trading at 9-to-1, does that mean we can't be trading at 5-to-1 or 1-to-1? I don't know. But look, I'll take 20-to-1, and I'll be happy with 20-to-1. But I think it should be 9-to-1 or 10-to-1.
Keith, on First Majestic Silver, it's become one of the most talked about precious metal stocks of the year, delivering massive gains to investors. What do you say to people who are thinking about selling some of those profits today? What's to come for First Majestic shareholders? And as a part 2 to that question, same thing for First Mining Finance. Investors are up over 100% year to date. What's to come for those shareholders?
Yeah, First Majestic is actually, just for your listeners, was the top performing company, all industries, top performing company on the Toronto Stock Exchange in the first quarter of 2016, which is quite an amazing stat, and it just goes to show you how these mining stocks, they just act like elastic bands. They get so oversold, and then all of a sudden a rush of capital comes in, and First Majestic's the purest silver company in the world. So when silver, when the attitude, sentiment towards the metal changes, and people think the metal's going to go higher, First Majestic is really the go-to name. So, if you go back to 2011, of course, silver was higher, so it's not an exact measurement. But, if you look at what our market cap was then, we had a $3 billion market cap, and we produced 7 million ounces of silver. This year we'll produce 20 million equivalent ounces of silver, almost 3 times as many ounces of silver as we produced in 2011. We have a $1.5 billion market cap, which is half the size of the company as it was, a few years ago. So, I think there's a lot of room, but, look, the stock has done really well, and you can't blame investors for taking profit. But, if you're a bull on silver, if you like what we're doing, you should probably have it as part of your core position. But, there's nothing wrong with trading and taking profits, of course. And then, investors should be, taking gains. You never, it's always a good thing to make a little bit of profit. But anyways, it's great to see that, quite honestly, investors are making money again. That's really what I care about more than anything, that, people do make money when they invest in either of my companies. And, First Mining Finance, it hasn't performed quite as well, because, we've been in pretty aggressive acquisition mode. So, when you're buying assets so aggressively as we have in First Mining, it's going to weigh down on the stock, because it creates, uncertainty. People really don't know, what the company's doing. So they take almost a bit of a wait and see attitude. We've really impressed a lot of people, I can tell you that. And, we've really turned some heads, in what we've accomplished. There's, I've never, ever seen a company buy or accumulate successfully as many assets as First Mining has in any time frame. It's been, First Mining has bought more companies than First Majestic has in 14 years.
That's incredible.
Yeah, so we did the stuff that we've achieved at First Mining is just unbelievable, and the market's not recognizing it yet because, as I said, there is uncertainty around the model. But as the market gains confidence, as we start telling the story more effectively, and then getting letting people know what we've accomplished, and then so on, I think the market's going to perform extremely well. And I put First Mining together to create another $1 billion company. I didn't do it to create a $300 million company. So I think there's a lot of room for it to grow over the next couple of years. But investors need to be patient. Things don't go straight up. We're in a bit of a correction now, but I wouldn't be getting too nervous about it. I would just kind of stand in the weeds, or if you don't own it yet, maybe look at it if it's in your investment criteria, if it would fit into your portfolio, and then if you want to call the company at any time, we're available for emails or answering any questions, then I would suggest you do that, or you can follow me on my Twitter account, Keith_Neumeyer, and there's always some interesting information there as well.
If you think gold and silver are going to go higher, like myself and Keith Neumeyer, I can't think of two better companies to buy. First, Majestic Silver, the purest silver producer in the world, and then First Mining Finance. It may be the ultimate gold optionality play, where here you've got exposure to all this gold in a safe region, Canada. It doesn't get any better than that. And of course, it's headed up by Keith.
Yeah, just, that term optionality play, I just want to clarify that, because I don't look at First Mining as an optionality play. That's a term that Rick Rule's come up with. And, it's really what Bob Quartermain and Ross Beatty did, with their two companies, Lumina and Silver Standard, where they're buying, very, very low grade assets that are far out of the money, and it's a bet on the commodity. And they made. I'm not saying they didn't make their shareholders a lot of money. It worked out very well in both cases, but I think this is quite a different situation. These assets we're buying are high grade, in the money assets. This is early cycle stuff. This is not late cycle stuff like Lumina or Silver Standard. These assets that we have in our portfolio today were not financed in the last cycle because the management was not capable of raising the money and advancing the projects, and that's as simple as that. These assets, as the next cycle develops, will be financed early on in the next cycle. Investors won't have to wait for $2,000 gold for First Mining Finance to be successful.
That's a very good point. Stand corrected, sir, on that. But I really appreciate your time, and thank you so much.
Well, thanks for your time, Daniel. Always appreciate it.